Hey, welcome back! So far, we've talked about opening a bank account, checking versus savings accounts, banks versus credit unions, paying with a check, and getting paid with a check, and debit cards and credit cards, and whoo! That's a lot! So if you haven't taken a break yet, go ahead and do that because you've earned it.
It is physically impossible to relax everything.
Alright, let's talk about loans, or more specifically, installment loans. Installment loans are very similar to credit cards in the sense that you're just borrowing money from the bank and that you're paying interest on that money that you borrow. But they're structured very differently. An installment loan is given to you in a lump sum and then you pay it back over time. Unlike credit cards, once you pay off what you borrow from a loan, you're done with the loan. Like you can't just re-borrow it over and over and over like you would with a credit card. And there's also no card to go with it, so.
Right.
Now, to get a loan, the process is a little bit more thorough because this is not just some little amount that you will borrow and pay back right away. Like this is a relationship you're signing up for with a financial institution for a long period of time, usually years.
Will you marry me?
And when giving out a loan, financial institutions don't only take a look at your credit history, but also at your other financial obligations, what kind of collateral you can offer, how much money you have saved, like if you can put some money down for the loan, if it's a purchase, and the reason why you need the loan. For example, let's suppose that you want to buy a $20,000 car, but you don't have that kind of cash lying around anywhere. Well, you can put some money toward the purchase of the car, and let's say like $3,000, and apply for a loan to cover the rest. In that case, the financial institution will basically pay for the car and then you will pay them back over time with interest, of course. So you'll end up paying a little more than $20,000. And that car is going to be their collateral, meaning that if you don't make your payments on time, they will take your car away. Like literally, somebody will come in the middle of the night and tow your car away.
Hey! Hey, that's my car!
Now, you can always voluntarily surrender it if you know that you can no longer make any payments, but either way, your credit will be damaged because you failed to deliver on a promise of paying back money that you borrowed.
You let me down.
Obviously, personal loans and car loans are not the only types of loans out there. There are also like mortgages, business loans, credit builder loans, student loans, home equity loans, and many other ones that you might encounter eventually. But they all have their own requirements and you may qualify for some, but not for others, even with good credit. So always do your research and consult with a professional before making any important financial decisions.
That's very important.
Now, I mentioned that I will help you avoid paying so much interest.
Tell me more, tell me more.
Well, the interest that you will be paying for the length of the loan, it's already included in the monthly payment. And they won't tell you this, but like the first half of all the payments that you're making are gonna go towards that interest as opposed to the principal, which is the amount that you technically actually borrowed. One way you can get around that though is to pay more and make sure that it goes towards the principal. And most lenders let you do this, but some may have an early termination clause that says that you will pay a penalty for ending the loan too early. So make sure to check if there's an early termination fee before you decide to accept that loan.
Roger that.
For now, this is all I have for you on loans, and we will talk more in depth about them in lesson 6 when we talk about borrowing money. Now, coming up next, we will talk about a pretty neat way to save money that doesn't get talked too much about, and that is certificates of deposit.
What is that?
Well, I'll tell you in the next video. See you there.